President Trump has issued a stark ultimatum, one that could reshape the global financial landscape for years to come. Major banks around the world now face a critical decision. They must choose between doing business with China, the world's second-largest economy, or keeping access to the powerful U.S. financial system. This move targets the very core of global commerce, threatening to sever decades-old financial ties and injecting massive uncertainty into the world economy. The ripple effects could be felt in every corner of the globe, from bustling trading floors to remote shipping ports. The threat is clear. Losing access to the US dollar, the world's reserve currency, poses an existential risk for any international bank, potentially undermining their ability to operate on a global scale. Banks now face a stark choice: China's vast and growing market, with its promise of future profits, or the irreplaceable US dollar system, which underpins the majority of international transactions and trade. Unlike tariffs, which raise costs but allow trade to continue, this directive could halt trade entirely by making it nearly impossible to finance shipments from China, freezing the flow of goods and capital. The implications ripple far beyond big corporations, affecting small businesses, factory workers, and consumers in both countries. Anyone tied to US-China trade could feel the impact. The White House claims this drastic measure is necessary to address what it calls unfair Chinese trade practices and to protect American interests. As global leaders scramble to respond, the world watches anxiously, with the stability of the entire financial system hanging in the balance. Every decision made now could have lasting consequences. Will banks comply with the order, risking their ties to China, or seek creative ways around the restrictions to protect their interests? One thing is certain: a new era of economic warfare may be dawning, and the world is bracing for what comes next. The US dollar isn't just America's currency. It's the backbone of global trade, the invisible thread that ties together economies from every corner of the world. Its influence stretches far beyond US borders, shaping the way nations do business and how money moves across continents. Most international deals, from oil to commodities, are settled in dollars, giving the US unmatched leverage. Whether it's a shipment of crude oil or a bulk order of wheat, the dollar is the default language of global commerce, making it indispensable for countries and corporations alike. Banks worldwide need dollars to serve clients and clear transactions. Losing access would cripple their operations. Without a steady flow of dollars, banks would struggle to pay suppliers, finance trade, or even meet basic obligations to their customers. Wall Street is the epicenter of global finance, and being locked out means losing access to the world's largest, most liquid markets. The sheer volume of transactions and investment opportunities found in New York simply can't be matched anywhere else. International banks rely on US correspondent banks to process dollar transactions. Without them, global trade grinds to a halt. These relationships are the lifelines that keep money flowing smoothly between countries, businesses, and individuals. The ultimatum forces banks everywhere to weigh their business in China against their need for the dollar system. It's a high-stakes calculation, as cutting ties with the US could mean losing access to the world's financial bloodstream. For most, the choice is clear. No other currency or market can replace the dollar and Wall Street. Alternatives like the euro or yuan simply don't offer the same stability, trust, or global reach. This is the leverage the White House is counting on to force change in China's economic behavior. By controlling access to the dollar, the US can influence decisions made in boardrooms and government offices around the globe. The US holds the keys to the global financial system, and now it's threatening to lock the door. The message is clear: comply or risk being shut out of the world's most important markets. The stakes are enormous, and the world's banks are on notice. Billions of dollars, thousands of jobs, and the stability of entire economies hang in the balance. The ultimatum is not just a threat, it's a test of the global order. How countries and banks respond will shape the future of international finance for years to come. The pressure is on, and the consequences will be felt worldwide. Markets are bracing for impact, and uncertainty is rippling through boardrooms and trading floors everywhere. The world waits to see who blinks first, as the balance of power in global finance hangs in the balance. Markets reacted instantly. Within minutes, the world's financial centers were thrown into chaos as news broke across every major network. Stocks plunged worldwide, with banking shares hit the hardest. The sudden drop wiped billions off market values, sending shockwaves through every sector. Investors fear a global credit crunch as banks scramble to comply or risk losing access to the US dollar. The uncertainty is fueling panic, with many rushing to secure their assets. Major banks are in crisis mode, facing the impossible choice of abandoning Chinese business or risking US sanctions. Boardrooms are filled with urgent meetings as leaders weigh their options. The disruption could halt trade, break supply chains, and upend years of global integration. Shipping lanes are already seeing delays, and logistics companies warn of cascading effects. Even a European company making goods in China for US sale could see its operations freeze overnight, leaving workers and suppliers in limbo. The order's reach is global, ensnaring any country or company tied to both the US and China. No industry or region is immune from the fallout. Governments are alarmed by the extraterritorial reach of US law and the threat to their economies. Leaders are scrambling to assess the impact and protect their interests. Diplomatic channels are buzzing as leaders seek exemptions and clarity. Behind closed doors, negotiations are tense and urgent. Allies worry this is an overreach that could isolate the US and destabilize the global order. The risk of long-term damage to alliances is growing. The world's financial system is suddenly on shaky ground, with volatility at levels not seen in years. The uncertainty is toxic, and the stakes couldn't be higher. Every decision now carries enormous risk for companies and countries alike. The fallout is just beginning, and no one knows how deep the crisis will go or how long it will last. China isn't standing still. Beijing has accelerated efforts to make its economy more self-reliant. The government is boosting domestic growth with aggressive monetary and fiscal policies. The central bank has slashed reserve requirements, freeing up billions in yuan to spur lending and investment. China is pushing for greater use of the yuan in global trade, building alternative payment systems to bypass the dollar. The US ultimatum only speeds up these efforts as more countries question their dollar dependence. China is investing in technology, innovation, and high-value industries to move up the global value chain. The goal: create a resilient economic fortress, less vulnerable to external shocks. This is a long-term strategy, but the urgency is now. China aims to secure its place as a global economic power, no matter the pressure from Washington. The world is watching how fast China can adapt. Stabilizing China's property market is crucial to its economic defense. The government has cut housing loan rates and eased restrictions to boost demand and prevent a real estate collapse. These measures aim to restore confidence and prevent the sector from becoming a systemic risk. At the same time, Beijing is trying to manage the transition away from over-reliance on real estate, seeking a soft landing. A stable property market supports jobs and household wealth, helping China weather US financial pressure. The balancing act is delicate but essential for social and economic stability. By shoring up real estate, China strengthens its foundation for the battles ahead. The trade war's human cost is real, felt by ordinary people on both sides. In the US, farmers who once relied on China are facing financial ruin as markets vanish and debts mount. Government aid offers little comfort for lost livelihoods and generational farms at risk. In China, millions of factory jobs tied to US exports are threatened as orders dry up and production slows. The banking ultimatum could bring factories to a standstill, triggering layoffs and hardship. Globally, consumers face higher prices and fewer choices as supply chains break down. Economic decoupling means inefficiency and pain for families everywhere. This isn't just about governments or banks, it's about jobs, incomes, and daily life. The ripple effects are personal, and the stakes are high. The US order throws global supply chains into chaos. Decades of efficiency are threatened as banks hesitate to finance China-linked transactions. Even companies with no direct US ties are caught in the crossfire if their banks fear US penalties. The result: halted production, scrambling for new suppliers, and soaring costs. Companies are rethinking strategy, shifting from efficiency to resilience, moving production to Vietnam, Mexico, or India. This friendshoring is costly and complex, but now seen as essential. The world could split into rival economic blocs with higher prices and less choice for everyone. The disruption can't be contained. It ripples through every industry and country. The era of seamless globalization may be ending. The system is straining and uncertainty rules. Amid the turmoil, US and Chinese officials have agreed to meet for high-stakes talks in neutral territory. It's the first real effort to find an off-ramp from confrontation and avert a global crisis. Both sides arrive with firm demands. The US wants economic reforms. China insists on respect and equality. The best-case scenario is a comprehensive deal. Unlikely, but possible. More likely is a temporary truce, partial rollbacks to stabilize markets, leaving deeper issues unresolved. Failure could mean a total breakdown, dividing the world into rival economic spheres. The stakes are enormous. These talks will shape the future of US-China relations and the global economy. Success could restore stability. Failure could deepen the divide. The world is watching, hoping for a breakthrough. The outcome will echo for years. The world stands at a crossroads: escalation or resolution. Trump's ultimatum has pushed the US-China rivalry to a dangerous new level. Escalation means fractured economies, broken supply chains, and global instability. Resolution requires statesmanship and compromise, offering hope for a stable, connected world. The next moves by Washington, Beijing, and their allies will decide the outcome. The economic damage of a full-scale financial war could force both sides back to the table. This is a test for the entire international community. Peaceful solutions are a necessity, not a luxury. The decisions made now will shape the world for a generation.